Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the slightly late running Bull versus Bear webinar for Wednesday, the 1st of May, Labor Day for much of the world. So most of Europe and some of Asia off for Labor Day. Actually, Labor Day used to be on the 1st of May in the US as well, I believe, but it got shifted many decades ago. But traditionally, Labor Day around the world. We're actually not on a holiday in the UK, we have our Labor Day holiday the first Monday of May, so we're out on Monday. So there will probably be no webinar on Monday. I'll let you know on that one. Just to say as well, a bit of housekeeping in here. So obviously the sale, we've got on sale today, in case you missed it. So we are on sale, 40% off for all accounts from 50,000 and above, from the higher for 50,000 through the $250,000 accounts, all on sale at 40% off. And then also with that sale, no activation fee on any evaluations taken out. That's going to run for 10 days from today through till next Friday, and then we'll close Friday midnight. Next Friday, the 10th, I guess. So that's to announce. Also, we've had a slight issue, only impacting a small subset of users in here over a night. Probably believed to do with the end of month changes to market data. So a small subset of users have indicated that they didn't at one point today. Did have live data and then lost their real-time live data. That appears to be our technology team have already fixed that. So for most of you should probably not see, if you've just woken up in the US, you won't have seen any issues. But some users in Asia and Europe have reported that this morning, a small subset. But I believe, my understanding from our technology team is that that's all been rectified and things are all okay. If you do have an issue, please do raise a ticket, send it through to support@tradeday.com is your best route to getting that solved. So, so that's all of that. Sal, slight apology for being slightly late. Remember, it's the Labor Day holiday day today. So as I say, I said earlier in the week, they might see some pockets of less liquidity, not only in Europe, also in Asia. So you've got much of the planet, a lot of banks, a lot of hedge funds, maybe not so engaged today. Having said that, we do have the ISM manufacturing PMI data today at 10 o'clock Eastern time, and clearly we have the FOMC interest rate decision later today at 2 o'clock Eastern time, then 2:30 we get the press conference. Remember, either side of 2 minutes, either side of the 2 o'clock Eastern time FOMC meeting, no open positions, no working orders in the order book, or you will fail your evaluation. So please do keep that in mind as you go forward in here. No trading 2 minutes before or after the FOMC decision. I'm sure most of you guys that come on to the webinar here are well aware of that anyway. So I'm not going to lecture you anymore on that one. No trading or no working orders in the order book. 2 minutes either side of 2 o'clock Eastern time. Work that out, whatever time that is for you today. We also get the ISM manufacturing employment data today. So even though there might be some lack of liquidity because of the European holidays you can see up here, and not only European, Asian holidays, but I don't think it's going to have a massive impact because a lot of those trading desks will be manned anyway, and participants will be aware, obviously, that we do have the Fed data today. But obviously, the actual markets in these different zones and these different countries are actually closed. Okay, so that's what we've got. Obviously, a big focus on the FOMC. I'll just run through a few bits on that as we go forward today. The other thing, though, to note is if I just skip back to yesterday, we did get the Amazon data in here today, beating on both their EPS and revenue numbers in here on the overnight. And if we flick into today, nothing really significantly big in here today. Yes, we get MasterCard and Qualcomm. Maybe watching Qualcomm. I mean, MasterCard acts more like a utility, so it doesn't really impact onto the major indices. Obviously, we are going to be looking mostly at the Fed in here today. So Fed in focus, clearly 2-day meeting ends today. Obviously no change expected, but it's going to be critical to see what the statement says and then the press conference. So obviously they are at 2 o'clock Eastern, then 2:30 Eastern. So the statement, we are looking for changes in that statement. I've got an article in here talking about what the potential changes could be in that statement in here. Interest rates are expected to move the stock market, and traders are pricing in a big reaction for the announcement. So the markets are anticipating a significant move. From AI demand in here, we've seen setback companies delays a string of tech companies to benefit the rising AI demand. So positives coming out of Amazon from last night, and most of the Magnificent Seven so far have done pretty well in this earnings season. Only Meta was a negative. Most of the others have seen positives in here. More cuts announced from Tesla. And then obviously Fed decision. Oh, sorry, we've also got ADP. Sorry, I almost forgot that. ADP. Remember, the ADP is the precursor. So that comes up in just 36 minutes time. So watching out for that. ADP non-farm employment, that's the precursor to the actual official employment report on Friday. So it continues to be, really from last night's Amazon data in here, the market has really gone into overdrive with announcements for the balance of this week. So as I said, Amazon last night, we get ADP plus ISM PMI data today. We get then the Fed, and then moving through tomorrow, we get Apple tomorrow. The European PMI come through because obviously they're out today. So we get the European PMI coming through today. And then we also, Apple on Thursday. And then moving through to Friday, we get the other part of the ISM PMI data, the services, plus the US employment report on Friday. So it's a really busy balance of this week. So we've run through the 5 things aside there. US futures slightly down in here. Markets, really just, I think, correcting. We've been having recent gains. Obviously, we've had a rebound into the end of April. And then markets, I think, just correcting that rebound in here as we've gone, despite the positivity that we got through from Amazon. We're seeing a slight correction in here yesterday and going into today on the basis of maybe markets just correcting and a little bit concerned. Maybe don't want to go into too risk on. So we're seeing a bit of a risk off mood in here, and also holiday themed markets as well. Remember, Europe's not been open this morning. Yes, the UK is open, but the rest of Europe not open this morning. So markets just kind of correcting with a lack of liquidity overnight. Futures dip as chip stocks drag. So chip stocks down overnight in here, and obviously all eyes on the Fed decision. But markets overnight last night were up after Amazon, but then dipping into this morning through the European session, with Europe mostly out. So said market-wise strong wage data, and then going into the Fed meeting. So where's this article I dug it? So Fed to signal delay of interest rates and Mitchell may tweak policy statement. That's going to be important, the tweaking of the policy statement. So I'm going to share, I don't know if you guys can access this, but have a look at this one and potentially what we might see changed in the policy statement. And then there's another article in here. Where is it in here? Was it this one? Yeah. No, that's not it. That's definitely not it. Oh, yes, here it is. Look, using Powell's past language to put these next through. The latest Fed meeting is underway. A new natural language processing model that studies Fed speak may tell us what's next. So take a look at this one. I haven't had a chance to read this one yet, but I'm going to take a look at this. So I don't know. Oops. 1 second. So take a look at this one. Let me share. But again, I think you're going to need a, I've got a Bloomberg subscription. I'm not sure which one of these, or if any of these, you're going to get an opportunity. So take a look at this one in here, talking about, so they actually, look, they've got a transcript of it's an interview up here. Big Tech, the Fed's next, it's a podcast. So you might be able to get this podcast. Listen to Big Tech website. Okay, you can get it on Apple Podcasts. So let me see if I can share these links in here, just in case you're interested, guys. This is where AI is. I'm assuming this is going to be, there's an Apple Podcast and there's a Spotify podcast in case you can't get it, but this is where it's taken us to actually kind of do some analysis on the and then iHeart. I don't even know what iHeart is. Maybe I'm getting old. Copy link. Where's copy link? There we go. So you got Apple Podcast, Spotify, and iHeart in here. So have a look at that. That's basically looking at Fed speak and trying to predict what Powell might say coming up. Okay. So all interesting. CME in here. Fed Watch tool. If I can get that to load up. Where are we? It's all slowed up at my end. Here we go. So nothing really to add to what we had said yesterday, but the market is now pushing out at least to September. Really, now the first rate cut in here. Look, so even now we're not looking. Still a 56% chance we've not cut rates by September, and now maybe even looking as deep out as November for the first rate cut in here. So 45% chance we're still unchanged in November. So the market now starting to price out any kind of rate cut, and then even now 27% chance we're still unchanged at the end of the year. So we could see that. My view is the Fed might actually surprise us on the other way. I think the market's got very, very down on any rate cuts. Obviously, the Fed have talked us down as well. We have had that slightly warmer than expected CPI data, and also the PCE data that we got last week. But all of this, I think, the market is now getting very down on the Fed making any kind of move before the end of the year. And the Fed could actually surprise us and leave the door open to that. And if they leave the door open to that, the market might seize on that, okay, the Fed may still be looking to cut rates, not into the summer now, but maybe the back end, the last quarter of the year, maybe from September through December, and we could actually see that seen as a positive from stock. So I'm sort of still looking at this from a positive aspect and playing this from the long side, as you see in the reports that we'll come to shortly. Nikkei slightly down 0.3. Hang Seng little changed overnight in here. European exchanges in here. Obviously the DAX and the CAC. This is from a couple of from 2 days ago. So the market, from last night's closes. These are not today's moves in here. And the FTSE, the only one of the European exchanges or the major European exchanges which is open, as the rest are closed on Labor Day. So these numbers are from 2 days ago. They're not from this morning, okay? Not from this morning's European data, from Wednesday's data. This is from where we were down closed from last night, okay? And if you look on the FTSE overnight, it's unchanged. And the US indices in here, it's dipping slightly lower in here. As you can see, those are the sell-offs that we saw yesterday. Notable sell-offs yesterday, but were after the sell-offs. In here we are, and despite the Amazon numbers being positive in here, we are eventually, when it loads, despite the sell-offs, despite the Amazon data being more positive, hasn't helped the futures out this morning. Futures dipping lower. Nasdaq's down another 0.6 in here this morning. So what are we looking at on yields? Well, yields climbed a bit high. I've been pointing out we could potentially see, and this is going to be all driven by the Fed today, and just watching for levels on yields. If yields start to break down to lower yields, higher prices, lower yields, if this eventually loads. No, it's not loading. I'll just refresh that one. I'll let that one refresh, but I'll go and show you my reports in here. So we're still looking at potentially in here. So the S&P, despite the dip that we saw back yesterday, still carrying a positive bias. This is not really topping patterns. Not going to abandon this bullish view ahead of the Fed, but it's all going to be on the Fed, guys, right? So it's almost like levels are a little bit irrelevant in here. You can trade. Obviously, you've got some of you guys trading very, very short term, but I would be, if you're any kind of like a day trader that kind of builds a position maybe a little bit over a day, then I would certainly be waiting a little bit in here for opportunities a little bit later in the day once we get into the Fed. And then here, look, bonds in this. We have tried to form this base on the 30-year, but the market obviously rolled over back lower yesterday. Similar story on the 10-year. It's trying to form a base, but we were down lower yesterday. But this is all going to resolve now going through the Fed. We're either going to be significantly lower, or if we rally, it's on 10-year up through 108.25.5 in here, and the 30-year, if we can get back above when this reloads, 116.05. If we can get back above there, then we're certainly seeing basing patterns going in on the bond markets and potentially higher prices, lower yields. That should be supportive of equity indices. And we're still looking in here. So even though we had that setback yesterday, this whole recovery that we've seen from the latter part of April still intact. But again, it's all going to be just on the Fed right today. So I would be personally, I'd keep my powder dry ahead of the Fed. Stay in the markets. I wouldn't have any kind of significant positions, and I'd be waiting for opportunities. Obviously, you can't trade 2 minutes before or after the Fed, but post-Fed, there should be opportunities anyway, to jump onto trades after those 2 minutes. And then you've got the opportunities through the press conference, which comes half an hour afterwards. Remember, in just now, let me go back in how many minutes now? We're 27 minutes to the ADP employment change. So you've got opportunities there as well. And also the ISM PMI data, although the markets probably won't move too much through both of those pieces of data, given that you've got the Fed just a few hours later. All right, guys. I'll be back with you tomorrow when we can pick the bones out of what the Fed have said and done, and see how that is impacting markets, and whether we're still kind of got an underlying bullish tone to the stock indices, or whether that is flipped back to a more bearish theme as we go into the start of May. I'm going to wish you a great trading day. Take care. Stay safe. Don't forget, if you're not going to sign up anyway for the sale, if you've already got an account, which I assume most of you do have, or if you're going to cancel and maybe re-sign up, you've got 10 days to do that anyway. But do please, if you're in Discord groups, please do share the word that trade day currently on sale, 40% off, and that would be very much appreciated. And anyone has any issues with delayed data, please raise a ticket with support@tradeday.com. Thank you. All right, guys, have a good one. Take care, stay safe. Helmets and goggles at the ready for the Fed. Bye.